let's be careful. A lot of this stuff could very quickly spiral out of control from just a financial crisis to a civil unrest crisis, or even worse.
Hey guys, welcome back to Library of Wealth. Today we have Bitcoin maximalist Greg Foss forecasting the current financial market and where we're headed this year. Foss doesn't believe that the short-term Fed funds will rise to 4.5%, especially with the world already straining under 2.5%. Because Germany, as the debt payer of other southern European nations, is already not displaying any solid growth, Foss doesn't see how the Fed can raise up another 2%. He's seen the start of a pivot being laid out during the last Fed meeting, and with words such as data dependency and neutral policy, Foss feels this is a sign that voting policies will most likely be impacted in their next meeting. Let's listen to Greg Foss as he talks about the current financial crisis and the future of Bitcoin. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So here's what we know. They are saying that 4.5% short-term Fed funds overnight rate is still on the table. Currently, it's 2.25% to 2.5%, so that implies another 200 basis points of tightening. I don't see it. I think the world is close to breaking right now with rates at 2.5%. Why? Well, you look in Germany, retail sales absolutely, soiled the bed. It was, again, 5 years, Germany hasn't provided any substantial growth. And they are the ones that pay for all the other bills of their southern European neighbors to incur debt and whatnot. So you have the ECB, you have the Fed, you have people who claim, including some Fed governors who claim that the Fed is going to reach 4.5%. I don't see it. That being said, that's what makes a market. I believe the initial the beginnings of a pivot, not an official pivot, were laid at the last Fed meeting. And they used words like neutral policy, data dependency. We'll pause, we'll see. And then you throw into the ointment midterm elections in November, and you really have one more Fed meeting before you can, let's say, impact voting policy. So very difficult to thread that needle.
Foss believes situations like the price of lumber decreasing to 2020 levels is a sign of a deceleration of commodities. This also shows that people now think that the Fed is currently doing nothing but job ownership. Foss notes that many things can rapidly spiral out of control, from financial trouble to a civil unrest crisis. A financial crisis would hurt, but would be much better than the loss of world peace and civility, but there is a sizable chance that things could go to the extreme.
And there's a lot of things that are pointing to a slowdown. Commodities, lumber coming back down to 2020 levels. All these things, for me, indicate that people believe the Fed is nothing more than job owning right now. And the markets back that up. Equity markets had their best best month in many years in July. So not saying I'm right. I just like to read the tea leaves. I don't believe they can raise to 4.5% without causing a global depression, such reduced tax revenues in the United States that the debt spiral accelerates. And a guy that happens to believe the same scenario that I like his work probably the most in this space is Luke Gromen. And I'll just say I'm on Luke Gromen's side. Larry Lepard, much the same. Not saying that just because we are old, fat, white guys that we have the right answer, but there is a little bit of gray hair that goes with that outlook as well. A lot of this stuff could very quickly spiral out of control from just a financial crisis to a civil unrest crisis, or even worse. So if we maintain it as a financial crisis, I mean, it'll be painful to people, but at least it won't be costing, the civility of the world and the peace in the world. Chances are, though, that it could go that far and that extreme. I don't want it to happen, Natalie. I don't think you do. I don't think anybody with a conscience wants it to happen. I think the Fed governors laughing about it, though, is absolutely disgraceful. I can't say it any other way. You cannot laugh at your ability to forecast, which is horrible, and the potential consequences, which could be global civil unrest. But I believe, and this is based on my belief, that the Fed has started to pivot. I believe that a hard landing is likely, but a depression is a lower probability outcome. So my, if you will, baseline thesis is, yes, we're in recession already. Let's not split hairs.
Yeah.
Recession defined as 2 quarters of negative growth. It will get worse before it gets better. I hope that the Fed wisens up and eases financial conditions, changes their inflation benchmark or inflation target, and we realize that as a world, QE infinity is a reality of life. Because it is a reality of life, just that no one's admitting it right now. So why don't we get on to the truth serum and start admitting that QE infinity is a reality of life? The most beautiful thing is Bitcoin is essentially that same type of insurance, but you don't need an ISDA. You don't have counterparty risk. And guess what? There's no time. It doesn't end. You're not buying insurance for 5 years. You have it forever. Mm-hmm. That's why I say Bitcoin's the most beautiful option contract I've ever seen in my life. Don't overthink it. Yes, it's a nice soundbite called credit default swap protection, if you will, on global central banks. By my math, it's worth over $400,000 US per Bitcoin today. You're getting it for a bargain, cheap price. Michael Saylor, all of these guys who have exposure, I mean, they're big boys too. And in the context of everything, as well as Michael Saylor's stock's done and everything, and the company's a $5 billion enterprise value or something, or no, maybe it's $8 billion. At this point, still a rounding error in the context of Apple being worth $2.5 trillion. Okay, like again, people, please understand the math and the relative size of all of these things. So look, just do the math, people. Understand that this is only 13 years old. There's going to be some growing pains. Mm-hmm. There will be a time, though, and I'm very confident of this, where it will decouple, because that's what it is. It is insurance. Yep. And it will not trade in line. It'll trade inversely correlated to other risk assets.
Foss believes that the Fed has begun to pivot and that a hard landing is to be expected. He says that a depression isn't likely, but we've already slipped into a recession, and that will probably worsen before things get better. Foss says that Bitcoin is an amazing insurance because it's free from counterparty risk and ISDA, and it has no time limit. Bitcoin is now being bought for extremely cheap, which some misconstrue as a bad thing, but Foss advises to understand the context and the size of the situation. This shows that because Bitcoin is still young, it still needs to go through growing pains. Foss is confident that Bitcoin will decouple because as insurance, it will trade inversely parallel to other risk assets. What do you guys think about Greg Foss's opinion on Bitcoin's decrease in price? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.